This video will help you understand your Boeing retirement benefits that are afforded to you as of 2022 moving forward. If you don't know who I am, my name is Chris Dime. I'm a certified financial planner out of Edmonds, Washington, and I specialize in working with folks to and through retirement. There's been some updates as of 2022 relative to your Boeing retirement benefits, so I thought it'd be helpful to cover those changes. And there's two prime movers with these changes. There's the 401k and then there's the Supplemental Savings Plan. On top of these two benefit packages, we're going to talk about the automatic 2% contribution for 2022 and 2023. Stay tuned, we'll touch on that at the end. A few caveats though before we jump into these plans. Number one, we're not going to talk about how this applies to executives. You have a very different compensation benefit package that we'll have to talk about another time, as well as we're not going to talk about any specific investment selection within these plans. And this video is specifically geared towards the non-union employees of Boeing. If you're union, your benefits will be just a little bit different. This is also only for 2022 and beyond. So if you're trying to recreate history and look at maybe what happened in 2019 or 2015 or whatever, this video won't apply to you there. So let's jump in. So first up, let's talk about the Boeing 401k. Before 2022, this was called the VIP or Voluntary Investment Plan. I'm guessing that just got overly confusing for people, so they're renaming it the Boeing 401k Retirement Plan. So moving forward, I'm going to use the word 401k and not VIP, but know that I'm talking about essentially the same plan. The Boeing 401k is a defined contribution plan, which means it's regulated by the Internal Revenue Code Section 415, subsection C1A. So if you want to read about that there, you totally can. But that essentially just means that the employee plus the employer have certain contribution limits that they're allowed to put into this plan to keep it enshrined in a tax qualified status. Some of the first limits to know about are you as the employee, what you're allowed to contribute. If you're under the age of 50 for the tax year of 2022, your contributions are limited at $20,500. Whether it's pre-tax or Roth or a combination of the two, doesn't matter. You in total can't put in more than $20,500. If you're 50 years of age or older, your contributions are going to be limited at $27,000. The Internal Revenue Code also defines what the employee plus the employer can contribute to the plan together before that reaches a cap, and that's called the defined contribution limit. That limit, if you're under the age of 50, means the employee and the employer combined cannot put more than $61,000 into this plan for 2022. And if you're 50 years or older, then that cap is actually $67,500. And the simple math there is $61,000 if you're under the age of 50 plus the $6,500 catch-up contribution. Some cool things to know about the Boeing 401k. As of 2022 moving forward, they're going to match dollar for dollar up to 10% of your salary. So as a quick example, if you make 100 grand and you put in 10 grand, either pre-tax or Roth, into the Boeing 401k, you're going to get another 10 grand for free. This is great news because previously your Boeing matching percentage was not this good. However, the reason it's so good is it's coming on the heels of getting rid of the VIP Plus and the Restoration SSP Plus contributions that folks were kind of used to getting in the past. We're not going to jump into the specifics on those plus plans, but just know that those are fringe benefit contributions into these plans, and so Boeing's trying to make up for the lack of those with some other matching contributions. If contributing 10% of your salary and getting a 10% match from Boeing pushes you over those Internal Revenue Code limits, don't worry, you're not SOL, we'll talk about that. So for example, if you make $300,000 a year and you want to put in 10% of your base salary into the 401k plan, you can't do that. Because if you're under the age of 50, you're maxed at $20,500 and 10% of your salary is 30 grand. So you physically can't put in 10% of your compensation, which means you physically can't get the full match. Rest assured, Boeing has a solution for you. That's when we're going to come into the SSP, or the Supplemental Savings Plan. The Supplemental Savings Plan is what's called a non-qualified deferred compensation plan, and that's run through Internal Revenue Code 409A. The Supplemental Savings Plan allows you to contribute up to 50% of your base salary every single year into the SSP. And so going back to our example of someone who makes $300,000 a year and they're capped at $20,500, or if they're 50 or older, $27,000, there's still some employee contributions that need to go somewhere. And then subsequently, there's some employer match that needs to go somewhere as well. Those people would put money into the SSP, which would essentially provide them the space they need to make some additional contributions. If you make roughly $300,000 or above and you need a place to put the remaining percentage of your salary deferral, you'd want to look into the SSP. Keep in mind, as opposed to the 401k that allows you to make changes to your contributions throughout the year, the SSP is an irrevocable contribution, meaning once you decide how much you want to put into the SSP, you can't change that throughout the year. Now, every year is going to be a new enrollment, and so you'll get to make changes at that point, but throughout the year, you're not allowed to make contribution changes. At the time that you enroll into this plan, you will need to select what you want your distribution option to be. And that's essentially saying, hey, if I leave or get terminated or whatever, how do I want these non-qualified deferred compensation plan monies, or SSP monies, how do I want that to come back to my bank account? Those distribution options can range from lump sum to installment payments over 15 years. The default is a lump sum, which means if you leave the next calendar year, you're going to get a lump sum check for however much money was in that non-qualified deferred compensation plan, and then you'll have to pay some income taxes on that. So if you're carelessly going through the enrollment, I'd take a pause and prayerfully consider how you want to receive this money back. There won't be penalty taxes if you're under the age of 60, because this is a non-qualified deferred compensation plan, but you'll still have ordinary income tax liability to account for. Most of the time, I advise clients to pick the longest duration of installment payments. That way, it decreases the likelihood that if they have a high tax event in any year over the next 15 years after leaving, they're not going to pay egregious levels of ordinary income tax on these distributions. They're kind of leveling it out. It's kind of like a pension. I'd rather it be leveled out than they get a $1 million lump sum the next year. Because that next year, if they leave employment and go somewhere else, there could be signing bonuses, stock compensation, etc. And that's going to push up a client's total taxable income. And if they're also getting a massive non-qualified deferred compensation check in the mail, they'd be paying some pretty high taxes on that money. And odds are they don't need all that money immediately via lump sum. So essentially they'd be paying extra taxes on money they don't need, which obviously mathematically is not in their best interest. One caveat to note, regardless of the installment payment plan you select, if your SSP balance is less than 10 grand on the year you separate, that next year, they're just gonna stroke a check for the amount that's in that account and send it to you. They're not going to do a 15-year installment plan on a $8,000 SSP balance. Now, like I said earlier, you do need to enroll in this plan every single year. So if your compensation and 10% of your salary equates to a higher number than will be maximized in the 401k, you're going to want to create an annual reminder for yourself to enroll into the SSP to ensure that you're getting as much match as possible. Now, when it comes to investment selection within the SSP, this is not me giving you hard, fast advice on what to invest into. The investment options are pretty similar between the 401k and the SSP. However, your SSP, you will be enrolled automatically to invest all of your money into what's called the fixed interest credit fund. And my hunch is, if you're investing in this money as a part of your retirement package, you'll probably want to invest in something that will average you out a higher yield than this fund. The good news is you can change your investment selection at any time within the SSP. You can't change your contribution percentage at any time. One thing cool for folks that are employed with Boeing at the end of 2022 and at the end of 2023 is you're entitled to receive an automatic 2% contribution of your salary into either the 401k or SSP. If there's room to grow for you to receive that 2% contribution directly into your 401k, then that's where it's going to go. However, if you've maxed out on your 401k, whether or not you're enrolled in the SSP, that 2% contribution, if it otherwise would have pushed you over those IRS limits into the 401k, then Boeing will automatically send that 2% to the SSP. Again though, even though you didn't purposefully enroll in the SSP, now you're going to have money going into the SSP, which again takes me back to the recommendation that you go and check out and make sure you're not fully invested in the fixed interest credit fund. Unless of course that's what's in your best interest, but it's probably not. So what are your calls to action? Well, number one, I'd figure out which plans you're actually enrolled into, because if you're enrolled in the SSP and you didn't know about it, you probably have some money in there, that's why, and you're gonna wanna make sure you go and get that money invested. That being said, I'd say the primary thing as far as a call to action is concerned is make sure you're getting the full match. Most gurus in the financial space out there might have some cool stock trading, program you can buy from them, but I don't think any of them would recommend not investing in your 401k to get the full match. So that's step one. Make sure you're getting the full match from Boeing by contributing 10% of your salary and getting a 10% match. Third call to action would be to audit your fund selection within the 401k and the SSP. As a reminder, your SSP is automatically invested in that fixed interest credit fund, which for most people, for a long-term retirement investment plan, a fixed interest credit fund is probably not in their best interest. And the last course of action, I'm going to quote the plan summary documents directly. Before participating in the SSP, consider consulting with a financial planner or tax advisor. That does it for today. Hopefully it was helpful in kind of sharing these two primary movers that Boeing has to offer you. If you have more questions, you can drop them in the comment box below or send me an email. We'll get you squared away. Have an awesome rest of your week. Chat with you later. Bye.